we've seen the market be a little bit weak over the past few weeks or so, and that's exactly what I like. We're starting to see a few little buying opportunities coming up. This month I've got my eye on 3 specific stocks, and we're going to go through those in this video. These are the ones that I'm paying close attention to, and I'm almost definitely going to buy these 3 because they're a good opportunity right now for sure. Well, 2 of them I'm definitely going to buy. 1 is a potential buy. We've seen a lot of stocks drop quite recently though, wondering what's happening with the market, starting to show a bit of weakness. Watch out, don't get scared, hold your stocks, buy more if you still believe in the company, of course. But we'll go through these 3 stocks one at a time. I'll give you a quick breakdown on each stock and my bullish thesis on each one. Just enough to give you a little bit of an idea, and if it sounds good, you can go off and do your own research. Just before we get into these 3 stocks today, guys, don't forget to smash that like button. It helps the channel out, helps me out, obviously helps this channel get noticed, helps it grow. And if you aren't subscribed, by the looks of it, a lot of you aren't, but you keep coming back to these videos, please subscribe. It helps me out obviously as well, and helps you stay notified when I bring out a brand new video. Alrighty, the first stock up here is Tattooed Chef, ticker symbol TTCF. Now, this stock is currently sitting pretty at $19.93, which is what I like, because I love to see this stock under $20. It's a brilliant deal under 20. But pretty much Tattooed Chef is a plant-based food company. They produce and sell a bunch of plant-based food products. I wish I could order some of their foods to try over here in Australia, but they're only US based right now. They do plan on obviously expanding internationally eventually over time. Like, come on, doesn't this stuff look good? And I've actually owned this stock before it got real popular on YouTube. Thank you very much. I bought my first shares in Tattooed Chef around the start of December, and I've obviously built my position from there. So I was pretty fortunate to get into this one early before it did get pretty popular and start to get a lot of talk around the stock. Right now I have about 105 shares at an average price of about $19.50. And obviously this company, $20 and under, like I said, is such a steal in my opinion. It's just easy money when you look at what they're doing right now and obviously what they plan to do in the future. They are doing awesome things in the food industry right now and plan to do some very, very cool things. And this company is going to be a growth beast. Well, I mean, it kind of already is. They are expected to grow revenue 51% this year. What an absolute beast. Obviously, as time goes on, more and more people are leaning towards plant-based meals, plant-based diets. They're just eating less meat than what we're used to. So the plant-based food market is just going to be a market that continues to get bigger and bigger over time, and I think Tattooed Chef is going to be one of the leaders in this market eventually. They're going to have a big market share just because their product and their branding is going to be something else. I've heard from plenty of people in the USA that they're just starting to see more and more Tattooed Chef products in stores over time, and they plan to expand into a bunch of grocery stores. There's a big opportunity with this one. For example, a similar company to Tattooed Chef would be Beyond Meat, right? That's a lot bigger of a company. Sorry, there's some bloody flies in here, they're driving me mad. But Beyond Meat's market cap is $9 billion right now, give or take, and I personally see Tattooed Chef getting to that size eventually. They're currently only around $1.6 billion right now, so there's definitely a massive growth opportunity. The management team with this company is great too. The CEO, Salvatore Galletti, he's been in the food industry for probably longer than both you and me combined have been alive. He knows his stuff. And they've just recently came out and said that they've just recently acquired $200 million for the balance sheet. That's a serious cash cushion for a company that's only worth around $1.6 billion. They've definitely got plenty of cash laying around just in case they ever need it, or to use to invest back into the business or whatnot. Like I said, big things to come with this one. They report end of year earnings on the 10th of March, so I can't wait till those come out to read over the numbers, see how the company's doing, because this company is awesome, and while it's under $20, I'm definitely going to be buying some more, adding to my position. Alrighty, the next one is Facebook, ticker symbol FB. Facebook's currently at a price of $257 roughly, and I'm sure you guys know what Facebook is. They own a bunch of social media platforms, you know, Facebook, Messenger, Instagram, WhatsApp, all that kind of deal. They own the Oculus brand as well, which is just going to become a bigger and bigger part of their business as time goes on. But obviously the main source of income, main source of revenue is from the social media platforms. But I'm sure it's pretty obvious, they make most of their money from online advertising. If someone wants to advertise their product or their business online, they pay Facebook some money to be put onto their platforms, put ads onto their platforms. I'm sure you've seen plenty of sponsored ads on Facebook or Instagram before. Companies pay Facebook to be able to put their ads on their platform so you see them. And that's how Facebook makes its money. And pretty much Facebook has a massive market share in this space. If you're going to advertise online, you're only really going to go to two companies because they have the majority of the market share. And that's Facebook and the other one is Google. And it's definitely a great way to get your product out there because last quarter Facebook reported that they have 2.6 billion daily active users and 3.3 billion monthly active users using at least one of their platforms every single month. That's just crazy that over 40% of the world's population use at least one of their platforms every single month. And the amount of data that Facebook has on these people, you can target your ads so well. Facebook knows exactly who to target your ads to if you give them a few demographics or whatnot, or categories was the word that I was looking for. But Facebook is honestly one of my favourite, if not my absolute favourite company. Now I do already own Facebook stock. I currently have about 15 shares which I bought in at an average price of just under $200 per share. I think I bought about half of my position at about $150 a share ages ago, and then around another half at around $250 or so, which kind of averages out to the $200 range. I'm currently up about 27%, but in today's market and Facebook's valuation right now, I think it is still so undervalued. This company is dirt cheap. Look at this. As of filming this video, Facebook's forward PE is around the 18 to 19 range, and it's expected to grow nearly 25% this year. This company is dirt cheap. If you look at all the other big tech stocks compared to Facebook, Facebook is definitely the cheapest by valuation right now, in my opinion. Compare this. Google has a forward PE of 25 right now and is expected to grow revenue by 24% next year, and these companies are very similar. So Google obviously has a higher forward PE, but is going to grow less. Doesn't make sense to me. Another example is Apple. Apple has a forward PE of nearly 26 and is only expected to grow revenue by 21% this year. Both these companies are big tech like Facebook, and you're paying a higher valuation for less growth. Now that's an interesting comparison to look at. Now Facebook has also been spending a lot of money upgrading security and hiring new people over the past 1 or 2 years or so, and they obviously had to pay a pretty hefty fine. I think it was last year, or it might have been 2019, but obviously a lot of expenditure like that had hurt profits a little bit over the few years. Don't get me wrong, Facebook was still strong as ever, very strong company, but obviously they weren't as profitable as what they would have been if they didn't have to make or spend that money, I should say. But obviously this capital expenditure is going to slow pretty soon, I think, and obviously we're going to see net profit margins be ridiculous. Facebook is going to rack in fat profits over the next few years, in my opinion. And I think we're going to see some ridiculous bottom line numbers from Facebook soon enough. In all seriousness, Facebook is the underdog or the undervalued stock out of the big tech stocks, and I'm definitely going to be buying some more this month. And the last stock up here is KB Home, ticker symbol KBH. Currently sitting at $40.38 as of recording this video, and this is actually a stock that I don't own. They also pay a bit of a dividend. The yield's currently at around 1.5%. Like I said, not a stock that I own right now, but it's definitely one I'm highly interested in and will probably add to the portfolio in March this year, or this month. I'd just like to do a little bit more research on it first before I dip my toes in. But basically this is a home builder company. They purchase land and build new homes on them that they then sell to potential buyers. They are one of the largest home builders in the USA, and they also have a home lending and insurance side of their business, which is obviously only going to grow more over time. But obviously their main business or their main money maker is building homes. Now obviously this stock was hit very hard by the coronavirus in a February-March crash last year, but has since made a very good recovery. Now generally the real estate market goes where the overall economy goes. So if the overall economy is doing good, then usually real estate's doing good. If economy is doing bad, then real estate is also doing bad. I think we're obviously nearly all the way through this coronavirus situation right now. Don't see it being too much of a problem in the future. We've seen pretty great real estate growth even during this whole situation. Doesn't seem to be too phased by it, and real estate doesn't show any signs of retracting, at least. I think obviously eventually the boom has got to stop eventually, but I think once it does stop, we'll just see it stabilize. I don't think we'll see any decline. I think it will just eventually stabilize and go nowhere for a while. The only bad thing or the only risk here with KB Home is obviously it may be very well possible that we do see real estate prices drop in the future for whatever reason. Maybe we figure out, you know, real estate prices have got a bit too overvalued. Obviously, if real estate prices drop, the whole kind of real estate market stops, and obviously there won't be as many people looking to buy new homes. KB Homes won't be building as many houses, therefore making as much money. That is a risk with this stock. But I think this company is ridiculously cheap at this point in time with a forward PE of just under 7. Now, in the home building industry, forward PEs are lower on average than the average forward PE in the stock market, but this is still even cheap for this industry. Especially when you look at this. Revenue growth of 41% expected this year. Woo! For a forward PE of under 7, hell yeah. Now, KB Home does have quite a big backlog of customers as well, which is good for them. EPS for this company is very solid as well, and they do seem to be constantly beating analyst expectations, which is another great sign of a good company. And the balance sheet is pretty solid as well, with $4.8 billion in current assets, with about $680 million of that being just in cash and cash equivalents alone. So that easily covers their current liabilities of $321 million. This company does look like a really solid company in my opinion, and one that I'm definitely looking at closely in March and potentially buying, starting a position in. But those are the 3 stocks that I got very close on my radar this month, guys. What are your thoughts on these stocks? I'd love to know. Let me know in the comments below. Please do not buy a stock just because I've said it in this video. Always go and do your own research before buying any investment. That is all I have for today, guys, though, so don't forget to smash that like button. Obviously click this circle in the middle here to stay subscribed. Check out the video and playlist, and I'll leave you guys to have a good one.